Good morning. For Traders Exclusive, this is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. I'd like to talk about the equity markets this morning. Equity markets took a turn for the worse last week. A lot of selling pressure has built up on the markets. Last week we talked about looking at the weekly closes to letting that be your guide. And sure enough, last week the S&P undercut its November lows. It fell below the 2019 level and really big volume last Friday. So that pretty much tells us the market may be spilling over into a correction. So right now we're looking to see if the S&P can hold that 2019-80 level. That'd be the next level of support. And it might not be in the new uptrend basically until we cross maybe 2062, which would just put it slightly positive for the year. So generally there's a lot of pressure going on in the S&P. And S&P is also trading below its 50 and 200-day moving average. Similarly, on the NASDAQ, also dropped below that 5,000 level. It did stay above the 4908 level, which was the November low. However, this morning is undercutting it and bouncing around that area. So if it doesn't hold here, it might actually drop down to 4,800 level. And again, for the NASDAQ to be sort of back in the clear and buy zone, we're looking for levels to go above 5,000. Preferably above that 5,200 level. Now, the market breadth continues to deteriorate. If we look at the NYSE advanced decline line, it also undercut the November lows last week. So pretty much in a downtrend, we're seeing more new lows as opposed to new highs. Now, the only positive thing that can be said at this point here is that there's a few select stocks that are still doing very well and hanging out near their highs, and that's pretty much a lot of stocks I've mentioned over the last few weeks. This morning Alta Salon's pretty much at a new high right there. Facebook's kind of holding up. Chinese gaming stock NetEase is kind of doing okay. So there's a lot of names you can kind of still keep looking at, stocks like Amazon. However, just realize the market downtrend, it's in a downtrend. However, also realize that we might get an oversold bounce here, and the reason I say that is we look at the percentage of NYSE stocks above their 50-day moving average. We're down to about 20%. And that level is right about where we start seeing markets bounce off lows. If we go back to 2011, even 2009, anywhere between that 10-20% level of stocks above their 50-day moving average pretty much tells us that we might bounce from that level. Similarly, if we look at the percentage of NYSE stocks above their 200-day moving average, we're at about 25%. And also anywhere between 20 to 25%. That's pretty much where the markets tend to bottom out and then turn around. So a lot of things going on this week. Markets are concerned about the junk bond market and energy shares. They're concerned about the Fed. But all this is kind of noise. It doesn't really matter why the market's going down, but it does matter to realize that the price and volume action is not that good on the indices. Before any new buys are placed, you'd like to see the markets turn around, preferably on good volume. So as always, let price and volume be your guide. This is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Have a great trading week.